Good afternoon. This is part 2 of a 3-part series of the National Real Estate Market Update with a focus of how that's affecting the Las Vegas market March 2014. I'm Dale Snyder with the Snyder Group, team-driven real estate at Keller Williams Realty here in Las Vegas, Nevada. This segment is specifically going to be talking about the investors pulling out of a lot of the marketplaces and how that is going to affect the market and who's going to backfill and fill in where the investors have pulled out of the market. All right, I love this slide here. The bottom line is the housing weakness should be temporary. There should be more inventory this year, price increases should slow, and sales volumes increase. Bill McBride, Calculated Risk, Finance, and Economics. So in Las Vegas, there's a lot of doom and gloom. The bubble's going to burst and, the world's ending, so to speak. Well, if you look nationally, we are going to see inventory go up and sales increase, which is going to change what the media is talking about how it's, the sales are down and all this other stuff. Here in Las Vegas, we are an accelerated market. What the nation is experiencing, we experienced last spring. Our inventory has already gone up drastically. In fact, it's a buyer's market right now in most price ranges and areas. And what I mean by a buyer's market is the available amount of inventory is 5 months or so or more puts it into a buyer's favor, meaning they have enough properties to choose from that they're able to come in and negotiate more favorable terms. Whereas last spring, if you remember, the sellers controlled it all. You'd have to come in, waive appraisal, ask for no repairs from the home inspection. You'd have to come in just super clean and you still wouldn't get the offer accepted. So our market's a little different. But again, the bottom line is the housing weakness should be temporary. There should be more inventory this year, price increases should slow, and sales volumes increase. Okay, this next slide is great. This ties into what I had talked about in the third quarter of last year when there was really all that talk about the hedge funds pulling out of our market and then what's going to happen. There's not going to be any buyers. It's a false market. Well, if you look at, I'm going to tie into that, but look at this slide here. Institutional investor sales. They are definitely down. Specifically in Las Vegas, they are down. We're seeing investors wanting to raise their hand and come into our market and buy. And honestly, a conversation most times is, we really can't help you because the margins you want don't exist anymore. So most of our sales are non-investor. They are primary occupants. With all this being said, there are some opportunities in our market for investing. At the end, we will connect a video where we have the agent on our team that specializes with investors. He's an investor himself, still doing flips in this market. There are opportunities, so I don't want to make it sound like they're not, but the heyday of 2 years ago where you could come in and have all these opportunities of bank-owned homes and getting an amazing deal, they're tighter. The margins are tighter and the opportunities are a little more scarce, but we can still help you out. Just want to clarify that. Okay, so who is going to replace the investors? This next slide talks about that. The first-time home buyers. The average age of the first-time home buyer is 31 years old, average income 67.4, and if you'll see, 66% of them are married couples. So the dual income is over 100 grand, 110, 120 grand. So that's who we're seeing buying a lot of these properties right now. They've been trying, but they couldn't get homes because the investors were gobbling them up, coming in all cash. So that's the sector that'll be backfilling and already is in our market. Okay, this next slide is very important to internalize here. Interest rates. This red line shows when the economic collapse happened, and interest rates they had to drop to keep the economy from completely, collapsing. You can see they bottomed out 2012, and they're projected to go up about 3/4 to a point in the next year. It really just depends. A conversation by a politician can have rates go up 0.5 point overnight, and then they go back down. A lot of volatility there. But what I do know is that buyers and renters are aware of this and they're concerned about this, and the transitional sellers that I talked about looking to either upsize or downsize in the market are paying attention to this as well. So that's creating some of the urgency that is also backfilling the investors that have pulled out of the marketplace. And when I say pulled out of the marketplace, the investors are still here. They're just not gobbling up inventory like they were. So we're going to make a quick transition here. We're going to be going into the renter mindset and the percentages there, because we've already discussed that's going to be a big percentage of the buyers, people coming out of the short sales, bankruptcies, foreclosures that are back in the market. And then we're going to tie all this together. So bear with me here and put your first-time home buyer hat on and the renter hat on for this next section. This slide here, buying is cheaper than renting in all of the 100 largest metros by an average of 38%. For those of you that study the Case-Shiller Index and understand that, you already know that out of the 20-city composite, Las Vegas is the most affordable, undervalued market in the nation still, out of all the 20-city composite. So this is a huge driving force for our buyer pool in our market specifically right now. Okay, this next slide shows the increasing cost of renting. Very powerful information here, right? If interest rates are ridiculously low and rents nationally are projected to go up, there's a natural tendency for these buyers to come into the market. Vegas is a little different again, and we can go into some doom and gloom about all the hedge funds and investors, oversaturating our market and rents going down and, the world's going to end, all that stuff. But we are still seeing properties rent quickly if the investor's not being cheap and they're presenting a quality product to the renter. And this is more of the prime areas. I don't have as great of a pulse on some of the less desired areas because that's really not our focus. If you have any questions about that or you're an investor and you have concerns, reach out to me. We can have an educated conversation about what we're really seeing on the ground level. So in conclusion to this video segment, make sure to catch segment 3, where we're going to focus on the big picture of what we're seeing nationally and how that's impacting Las Vegas, and break it down by region to see appreciation rates, and then we're going to tie all this together. So make sure you catch video 3.